And welcome to the Tear Sheet Podcast, where we explore financial services together with an eye on technology, innovation, emerging models, and changing expectations. I'm Tear Sheet Editor-in-Chief, Zach Miller. And the fintech investment landscape, it's fair to say, is heating up again. After a challenging 2022, 2023, early stage funding feels like it's recovering, with companies focused on practical problems, attracting serious investor interest. And the shift is toward infrastructure, embedded finance, and AI applications that solve real workflow problems, some of the stuff we talk about in this podcast week in, week out. Sheel Mohnot has been tracking this evolution from multiple angles. As co-founder of Better Tomorrow Ventures, he's raised $300 million across 3 funds focused on pre-seed and seed stage fintech companies. His perspective comes from building and exiting. He founded FeeFighters, which sold to Groupon in 2012, and he ran the fintech accelerator at 500 startups. BTV's thesis centers on what Mohnot calls the everything is fintech trend. Vertical SaaS companies that increasingly derive revenue from payments and financial services rather than from just software subscription. Toast is a good example of that, starting as a restaurant point of sale software and now gets over 80% of its revenue from financial services. I hope today we'll explore what Mohnot believes why Mohnot believes fintech is back, what types of companies are getting funded in 2025, and his view on AI and fintech, where it's working and where it's just hype. Sheel, welcome to the show.
Glad to be here. Thanks for having me.
Yeah, I'm glad you made it. And I'd love to start with the fact that you are a founder, you are a builder, and you've been an investor for a while. What special skills do you feel like the founder experience do you bring to the table when you make an investment, when you're sizing up an investment?
Yeah, I think there's 2 sides to it. There's founders want to work with founders, and especially at the earliest stages, I think that's really relevant because we've either built stuff before ourselves or helped other people build stuff that's very similar to what all of our companies do. And so I think that background ends up being super helpful, but it's not necessary, but it's something that we like. So everyone on our team is a founder or operator.
And I guess if I'm accepting money as a fintech founder from Sheel, and you do have that background, like you said, money is money, but what is it, I guess, from the founder's perspective that says, do you help the founders make certain decisions that you had faced in your investing, in your building
all
experience?
The time.
Yeah.
Yeah, all the time.
And
so
you have more credence
think,
by the fact that you have those battle scars. Yeah.
Yeah, I think some of it may not be that my advice is any better than anybody else's, but they're more likely to listen to it
right
and take it seriously. So I think that's a part of it. And I do think it certainly gives us a leg up where if we want to invest in a company, there's a very high likelihood that company is going to want to work with us. And it's because we've done it before and we're focused on fintech. So if you're building a fintech company, wouldn't you want to work with somebody who's done that before, even if it's in a different field? But it's still fintech, and in every category in fintech, even if we haven't built something, we've worked with companies that have built something. So it's been great.
That makes a lot of sense. And you've been in it long enough to see the few different cycles that fintech has gone through. Where do you feel we are in the cycle, given what's happened over the past few years? What kind of environment are we in, if you could describe it?
Yeah, great question. So look, I started investing in fintech in 2016, and 2016 to 2021 was like a straight line upward. And towards the end, it was literally a straight
vertical
line upward.
Yeah.
Vertical. And then it crashed pretty hard in 22, 23, beginning of 24. There was a lot less activity. People were really down on fintech. A lot of the generalist funds, the multi-stage generalist funds that had built out these fintech teams were telling me just a year ago, they were telling me, oh, we're not doing fintech anymore. We're doing vertical AI or whatever, the next thing of the month is, thing of the year is. And then all of a sudden, I would say Q4 into Q1 of this year, they were back. And fintech, a lot of companies started doing really well. Q1 in our portfolio, Q1 of this year was the best quarter ever by far. And then Q2 also has been an amazing quarter. So I think a lot of companies had raised too much money in 21.
Yeah.
Kind of like took took their medicine, like got into a really great place from a margin perspective, which wasn't there at all in 21 because nobody cared about margins in 21.
Right.
And so now fintech's, I think, on the rise, and you see that in the public companies. I think fintech over the last year has done tremendously well. Some companies, that were left for dead have become, again, very successful companies. And I think that's kind of true across the board in our portfolio.
Before we leave the question of investor-investee relationship, like those multi-specialty funds, the big generalist funds, the fact that they kind of left and vacated the space and coming back to it, does that have any impact on their ability to attract good founders?
I think the multi-stage funds, they always. So what we're talking about is the Series A, right? That's the most competitive space. At the seed, there's folks like us. There are multi-stage funds competing. Generally speaking, if we go up against a multi-stage, we have a very good narrative that usually wins. So what we're talking about is generally the Series A, and it's very competitive, and you got to do all that you can. And I do think some of the folks who found fintech out of favor are having a tough time getting back in the swing of things.
We didn't mean that.
I think, yeah, exactly. So I think there is a little bit of that, but I don't think it's that big of a deal.
Yeah, money is money at the end of the day. Sheel, at the end of your last question, you mentioned the companies that made it through are doing awesome. Can you describe, I guess, some of the attributes of those companies that are doing awesome?
Yeah, I think it all comes down to a founder and their ability to iterate fast. Is this team constantly churning out new stuff, talking to customers, listening to them, and iterating the product? And then are they tenacious? Are they breaking through walls to make stuff happen? And I think both of those things are qualities of founders that we really admire, and those founders that have been able to make this work. And we have examples of companies that went from burning like $8 or $9 million a month to being profitable in the span of 5 or 6 months.
Wow.
And that kind of stuff, it just shows the hunger and will to survive. And by the way, like, they continued growing despite reducing that deficit so much. So,
wow.
There are companies that survive and companies that, I think in the face of adversity give up. And fortunately in our portfolio, we didn't have too many of those.
Have the attributes that lead to successful leadership in this case, are you seeing more or less of that? Has that changed over the cycle? I know on this show we've had when we do interview fintech founders, like, you are seeing second time, third time founders come back, like people that have been through it before. I don't know if that has any impact on this, but what kind of founders are you seeing out there?
Yeah, I will say yes. I think you're right about the second time founder having a different mindset. And we have invested in a bunch of second time founders. I think they've learned their lessons, and then depending on how successful the first one was, they want to be more successful, which can set a nice mark, and they kind of know what they're doing more. But at the same time, you do have some multi-time founders who are used to dealing with starting with a lot of money. Because they had a lot of money towards the end of their last company, and they don't have the right mindset for starting over again. So you have both.
So I'd love to talk a little bit about your investing. Let's talk about Better Tomorrow Ventures, BTV. What's the mandate? You mentioned you're coming in earlier. What kind of check sizes are you writing? Things like that.
Yeah, sure. So we are a pre-seed and seed fund, and our last fund was $150 million. And we are generally writing checks between, call it, $500,000 and $3.5 million. And when we invest in the company, usually it's just a couple of folks and an idea, and usually they've done some sort of prototyping, they've spoken to a bunch of customers. But that's generally the stage at which we invest. and we spend our money and time helping them grow and getting to the next stage.
So you'll continue investing along in next rounds?
We do, yeah. We've invested in companies up and through the Series C, but more typically, we invest up until the B.
And that early, I assume you're leading the rounds as well?
Yeah, exactly. So we are with our first check at the pre-seed or seed, we are always leading.
Always, okay.
Or co-leading in some cases.
Awesome. Can you take us through the portfolio? I guess thematically, like what are some of the themes that pervade the portfolio? Maybe some of the companies that you like. I know it's always hard for investors that have large portfolios to talk about some of the companies. But
yeah,
if you can name anything by name, it'd be great.
I think the idea of starting by themes is a good one.
Yeah.
So we can go by one that everybody knows, which is spend management and banking. And we have a bunch of companies in this space. We started investing 5.5 years ago, and I think, especially at that time, a lot of these companies came into being, so we've got a lot of them. So prior to BTV, we were investors in Ramp and Mercury.
Okay.
So expense card mainly for startups and bank mainly for startups. And then we have a company called Coast, which is a fleet management company. So fuel and spend management for fleets business. So think about Ramp, but for Main Street. So your plumbers and HVACs and limo companies, it's a sneakily large opportunity going up against WEX and FleetCor, these incumbents that are, have poor practices and
last generation
poor UI.
Yeah.
Last generation, exactly. Then we have a company called Mendel. Mendel is a expense card for LATAM. They're not focused on the startup market. They are focused on larger companies. So they sell into the McDonald's, Hertz's, those Telmex, Mercado Libre, those types of customers. And they're doing quite well, raised the Series B. Then we have a company called Relay. It's an SMB-focused neobank focused in the United States. They also launched
had them recently on the podcast. Yeah.
Oh, cool. Yosef?
Yeah. Yosef Webb. Yeah,
cool.
Exactly.
Cool. So yeah, as you probably know, they're sneakily doing really, really well. I feel like I'm missing one. And then we have a company called Portal Tres in Brazil. Also sort of a similar expense card business in Brazil, more focused on SMBs.
What was it about the expense card business? Was it just that it was antiquated? But I guess what was the thesis moving in there a few years back?
Yeah, so I would say each of these, there are different reasons to exist, but really antiquated. So for Ramp, it was it was hard for businesses to get a credit card despite having a bunch of money in the bank and good credit. And there's a big pool of money to be made. And it became easier to build these products as the infrastructure showed up. And that, companies like Unit exist that let you build on top of them. So I'd say that is one thing that made it easier. And then as these companies got started, other companies, could build on top of what they had built, or could build similar products in a different niche, in a different locale, that sort of stuff.
So you have the expense card management as one theme. What are some of the other themes in the portfolio?
Another theme is embedded. And I know you know this theme well. So in the embedded banking side, we have Unit. There's embedded payroll. We have a company called Salsa. And embedded accounting, we have a company called Layer. So all of these companies work with vertical SaaS companies like Toast, you mentioned earlier, and they sit underneath Toast, empowering your Toasts of the world to do whatever it is. So it could be banking in the case of Unit, or payroll, if you're a vertical SaaS company selling to, motorcycle dealerships or restaurants, you want to be able to pay your employees through the same portal rather than exporting the information into ADP or Paychex, you can partner with Salsa. Same thing, rather than exporting to QuickBooks or having a bookkeeper, you can actually work with Layer, and then they can do everything within the same product.
That makes a lot of sense.
That's an embedded sort of thesis that we have. And then on that last one, Layer, that brings me to another thesis we have, which is the nature of accounting is changing. And we've invested a bunch behind that. There's a shortage of accountants in this country. It's pretty severe. And at the same time, you have this unstructured, fuzzy data that if you structure it, you can have technology follow rules. And you have AI. And surprise, it's the first time we're talking about it. But we have a few companies working in this space. So we have a company called Thesis that sells into large accounting firms and automates the work of a junior accountant. Layer, we already talked about, automates bookkeeping for SMBs, selling in through vertical SaaS. And then we have a company called InScope that automates the work of a late-stage private audit. And so that's that accounting thesis. And then I'd say one last thesis to cover is sort of AI services as software. We talked about Basis. We have another company was called Atlas, is now called Monk, that is automating the accounts receivable workflow for companies. We have a company called Kaj that's automating the lending onboarding workflow, and some other companies in that space.
So in the AI space, they're not pure play AI companies, but they've embedded AI into whatever vertical or horizontal that they're targeting.
That's right. They're mostly app layer AI.
And so given that portfolio, how many companies in the portfolio? Around?
Over 50 now.
Okay, awesome. Where are you looking to invest in the future? Like, what are the themes that you think are investable right now?
One thing I'd say is, like, we talked about the types of founders we invest in, which is tenacious founders who move quickly. I think that's more important to me than the specific area. We invest across
betting on the horse.
Exactly.
Yeah.
We do invest across areas in fintech. A lot of folks are down on consumer fintech, and we honestly haven't done a whole lot of consumer, but we look at that too. So I'd say we are pretty open and not very thesis driven.
And you have a global portfolio, Sheel. Do you target geographies or same type of thing? You're just looking for good ideas and good people to run them?
Looking for great ideas and great people to run them, but I will say, time zones can make things difficult. I have one company in Fund 1 that's in Southeast Asia, and I have these board meetings at 11 o'clock once a month. That's kind of annoying. So,
they can't fix the time zone thing with all the AI and Zooms and all that. You can't fix that.
Yeah, exactly. But it's not just the time zone. It's really just like, how well do we know these markets? And it is hard to get up to speed on a market. And then I also sort of believe that some of the best opportunities are in the United States. So we mostly invest in the United States. We have a bunch of companies in LATAM as well. Brazil and Mexico are markets we know fairly well. And then a little bit in Europe, but the companies we have in Europe are mostly operating internationally. And then, we have some companies in Israel, but those are companies focused on the U.S. market.
One last question for you as we get near the end of our conversation. How have you grown? How have you evolved as an investor over this time period?
Oh, man. It's funny to think about, like, the dumb things I did early on, and now I'm certainly doing dumb things now that in a few years from now I'll realize are dumb. But,
but you had to make those mistakes, I assume, right? Like, there were growing pains. Yeah.
Growing pains along the way. I would say, it's just brought me more and more to a realization of the types of founders I like to back. And, mistakes I made early on, we're not doing enough reference checks on founders. I think investing in some Me Too businesses. I think there are Me Too businesses that can make a lot of sense to invest in, and then there's some that don't. And just sort of figuring out which ones make sense. What else? I mean, there's so many things about running a fund and how to deploy follow-on capital, and it's really about concentrating in your winners. And it, you realize that over time, and then you also realize the power of the power law over time.
Sheel, it's been great talking to you, man. I appreciate it, and best of luck in the rest of the year and in the future.
Thanks, Zach. Great to chat.